Hey everyone, welcome back to another episode for Ask a CPA. I'm Brett Phillips, here to help you navigate the world of taxes. And today's question comes from Sarah in Jacksonville, Florida. Sarah asks, I'm a U.S. citizen living outside of the U.S. How do I handle my taxes? Well, you are in luck, Sarah, because today we're going to cover two of the major tax benefits of living abroad. First, the Foreign Earned Income Exclusion, and second, the Foreign Tax Credit. Plus, we'll walk you through the key tax forms you need to submit along with your U.S. tax return. So let's go ahead and jump into it. So first up is the Foreign Earned Income Exclusion. So if you're a U.S. citizen or resident alien living abroad, you can exclude a significant portion of your income from U.S. taxes. So for 2024, that amount is up to $126,500. That's right, you can exclude up to $126,500 of foreign earned income from your U.S. taxes. Keep in mind that this exclusion only applies to earned income. This includes wages and salaries and other forms of income from active work. Passive income like dividends, interest, or rental income is still fully taxable in the United States. So, how do you qualify for the foreign earned income exclusion? You have to meet one of two residency tests. So, the bona fide residence test or the physical presence test. So first, let's talk about the bona fide residence test. So you must be a resident of a foreign country for an entire tax year to meet the bona fide residence test. The physical presence test, on the other hand, you need to be in physical presence in a foreign country for at least 330 full days during any consecutive 12-month period. So if you meet either of these tests, you're in good shape to claim the foreign earned income exclusion. Next, let's talk about the foreign tax credit. So even if you're living abroad, you still may have to pay taxes to a foreign country where you're working. The good news is the U.S. doesn't make you double pay on those wages. The FTC, or the foreign tax credit, allows you to get a credit for the taxes that you paid in a foreign country, reducing your U.S. tax liability. Now, the foreign tax credit is especially helpful for those earning over the foreign earned income exclusion limit, for those with passive income, which isn't excluded under foreign earned income exclusion. The credit can still offset the taxes that you've paid abroad, dollar for those amounts. Now, you might be wondering, can you use both the foreign earned income exclusion and the foreign tax credit? And the answer is technically yes, but you can't use them on the same income. So here's a simple way to think about it. Use the foreign earned income exclusion to exclude your earned income, and use the foreign tax credit to claim a credit for any income that exceeds the exclusion amount or isn't eligible for the exclusion, like your passive income. Now let's talk about the tax forms you need to file with your U.S. tax return as an expat. So first is the 2555, which is the foreign earned income exclusion. Now this is the form you file to claim your foreign earned income exclusion. It helps you calculate the amount of foreign income that you can exclude from U.S. taxes. Next is the form 1116. Now this is the foreign tax credit. So if you're claiming the foreign tax credit, this is the form you'll need. It calculates how much of a credit that you can claim for the taxes paid abroad that will go against your U.S. taxes. Next is Form 8938. Now, this is a statement of foreign financial assets. So if you have significant foreign financial assets, you may also need to file Form 8938. This form is part of the FATCA requirement that applies to your foreign assets that exceed a certain threshold. And finally, you may have to file an FBAR, also known as a FinCEN Form 114. Finally, the FBAR is required if you have foreign bank accounts with a combined balance of more than $10,000 at any point during the year. Now, this is filed separately from your U.S. tax return, but is still a critical form to file to avoid any U.S. penalties. Now, living abroad comes with some amazing benefits, but your taxes can get complicated. The key here is to use the foreign earned income exclusion and foreign tax credit strategically to minimize your U.S. tax liability while staying compliant. And don't forget, expats are still required to file U.S. tax returns, even if you're taking advantage of these U.S. tax breaks. If you're living abroad and have questions about your U.S. tax obligations, make sure to drop them in the comments down below. And don't forget to like and hit subscribe to this channel so you never miss out on any upcoming episodes of Ask a CPA. Thanks so much for watching, guys. I'm Brett Phillips, and we'll see you next time. Take care.